Hello there, I am Yatin Mota.
Well, it was turning out to be a pretty stable session for the market. In fact, we hit a high of 23,030 post 2 o'clock. The entire texture of the market changed, and I know red is the color of the season. It's Valentine's Day today, but I'm sure the market has had too
Tomorrow,
much
not today.
tomorrow. Yeah, of course, tomorrow. But I'm sure the market has had too much of red, and we really don't want to see more of it on the screen. But seventh straight day of weakness. If you look at the market, then seventh straight day of losses. But Nifty as well. Gave up all the gains, came off all over 200 points from the day's high. Very flat if you compare it with yesterday's close, just around that 23,030 mark. Extremely flat, completely flattened out. Even the broader end of the markets were doing extremely well today. After days of pain, we saw a 2% uptick on the mid cap index, but even that completely fizzled out. Although the mid cap index did manage to eke out some gains, 0.3% kind of gain coming in on the mid cap index, but the small cap index also ended the day in the red. The Nifty Bank Index came off significantly from the day's high, ended around that 49,350 mark or thereabouts. But yes, breadth as well was pretty solid, but towards the end of the session, even that once again tilted in favor of losers. 1:1, but tilted in favor of laggards. In terms of sectors, IT, FMCG, PSU banks, and oil and gas. These were among the laggards today, but what's really stood out was the pharma pack, leading from the front, 1.5% gain coming in on the pharma index. FMCG also supporting the pharma index there. I beg your pardon, it was Realty that made a comeback. FMCG was a laggard. Realty made a comeback, after a few sessions of 3% kind of cuts. We saw a good 1% gain coming in on the Realty pack. Metals, on the other hand, did well as well. On the individual movers on the Nifty, you had the likes of Bajaj Finance, Bajaj Finserv. Bajaj Finserv was a top Nifty gainer yesterday as well, extending those gains. We had some pharma names like Sun Pharma, Cipla doing well. Tata Steel was the one from the metal pack that was featuring among the gainers today. On the flip side, Adani Twins saw losses of somewhere around 4% or thereabouts. You had some of the IT names, TCS, Infosys, HCL Tech. These were among the laggards. Also, Hero Moto and ONGC L&T. These were some of the other laggards. But Yatin, earnings reactions continue on the mid
Yes.
cap end of the markets. Honasa
Yeah.
gained somewhere around 14%.
Yeah, almost 13-14% higher for Honasa. Numbers are not that great, but
Hmm.
most of the brokerages who upgraded the stock, including IFL, think that the worst is over. Probably after a quarter, 2 quarters of inventory management, from here on there could be some growth. Obviously, the new budget also provides for higher discretionary spends. Given the fact that the disposable income increases overall with the new tax rates. So let's see how the Honasa sales moves forward, especially on the volume growth front. Suven Pharma. Strong numbers, stock 7% up post the numbers. Reddington all-time high post their results, and the stock is on a 3-day winning spree. So good move coming in there. Muthoot Finance also strong numbers, 6% up for that one. But what was not doing well is Natco Pharma, 20% lower circuit for that stock after they disappointed with numbers. Aegis Logistics, Vijaya Diagnostics, as well as Radico Khaitan, the other stocks which continue to fall. When it comes to stocks which are a 52-week high, they include SBI cards, were upgraded by Macquarie today. Stocks saw a 5% surge. Kotak Bank, after RBI's lifted restrictions, that stock saw almost 1.5% gains, 52-week high for that stock. Stocks like PI Industries, Barmer Lorry, KSB Pumps, SKF India, VIP Industries, all of these stocks have continued to trend to a 52-week low. So pressure continues in the broader end of the market as well.
Pressure continues, but there's some stocks that have managed to ride the storm pretty well. One of them is SBI Card. At a time when we saw a rout in the market, SBI Card has gained somewhere around
Yeah.
27 to 28% on a YTD basis. Today as well, the stock gained over 5%, hitting a fresh 52-week high. At one point of time, the stock was stuck in a downward, trajectory,
Yes.
but it has staged a very good comeback. And even brokerages are pointing out that the worst in terms of credit card delinquencies may be behind us, which is why I think Macquarie has also upgraded the stock to outperform from neutral. Target price has been raised to 1,000 rupees from 735. That means they have raised the target by 36%, and from the current levels, another 20% uptick is what they see. As I was mentioning, Macquarie has said that channel checks are suggesting that credit card slippages may be plateauing, for SBI card. In fact, they also expect the credit cost to start coming down materially over the next 2 quarters. Other catalysts, falling interest rates. Of course, we know that RBI has cut interest rates for the first time in 5 years, and given the fact that inflation has cooled off further and food inflation has also come down, there are chances that there could be further higher chances of further rate cuts going forward. Liquidity easing, and of course the tax cuts that were announced in the budget that would spur credit card spends as well. That's the hope. So that's also a catalyst, according to Macquarie. RBI is now incrementally turning softer towards unsecured loans. They had taken a series of steps to curb the massive growth in unsecured loans, but now that has also come down a bit, because loans have moderated in that segment. So the softer stance boding well for SBI card, but they have cut the earnings estimate by 13 to 15% for FY25 to FY27. They have cited lower NII and fees growth, slower loan growth as well. And of course, mind you, last month SBI card reported numbers. They saw a 30% fall in quarterly net profit. They saw NII also declining by 3.5%, although asset quality did show slight improvement, but numbers weren't really out of the woods. Because of that, I think they have cut the earnings estimate. But they've also revised the sustainable credit cost estimates downwards, and that could result in a sustainable ROA, return on asset, by 30 basis point to 4.5%, which is also seen as a good thing. Just want to point out that there are somewhere around 27, 28 analysts who track this stock. A majority of them still have a sell call. 10 of them have a sell call. And I think seven odd analysts have a buy call. But if the decline in slippages, credit card delinquency slippages is secular, more and more analysts could actually tilt towards the positive side when it comes to the stock. But for now, nothing to complain.
Yeah.
When it comes to SBI card. It has managed to ride the storm pretty well. A 28% uptick on a YTD basis, no mean feat.
Yeah, and the stock also doing well, 5% higher for that one. Clearly, rate cuts also probably benefiting all of these, credit card businesses, because the cost of funds really matter in the business when it comes to the margins and overall profit trajectory. But moving forward, another NBFC which was in focus apart from SBI card was Muthoot Finance. Today we have Bernstein, which has come out with the outperformer call. Target is 2,500 rupees. Obviously, the stock also ended at the day's high, nearly 6% higher for that stock post. Solid numbers. In fact, if you look at 9 months FY25, the growth was at almost 28% for the gold loan AUM. They have surpassed, the upward end of the guidance range, which was a 25% AUM growth. So the AUM growth continues to be quite strong. The management obviously did not revise the guidance upwards, but they are confident that 25% AUM growth is something that they are looking at. In fact, if you look at the growth in gold prices, which are at all-time high, the AUM growth can be more than 30%, according to Bernstein. Obviously, the credit costs are flat sequentially, but they continue to remain elevated. However, with the kind of gold prices we have seen moving higher, that increases the underlying, margin of safety for lenders, because, when you have a gold loan, the underlying which is provided by the, loan taker is gold. And when prices are higher, the bad debts are usually covered with the appreciation in the gold prices. So typically in a period where gold prices are firming up, gold loan companies do have an advantage, and that is exactly reflecting in the numbers and the share price, which has been hitting that 2,300 mark today, higher by about 6%. So good going for NBFCs. SBI cards also moving well, and Muthoot Finance also doing well. Top gainers on the F&O space.
Yeah, it's a good time to be in the business of gold, right? Given the fact that there's so much uncertainty when it comes to tariff, and a lot of safe haven demand has spurred gold buying. And look at gold any which ways, record highs, and even in the international market, it's above that $2,900 per ounce mark. But pharma was the other pocket that was in flavor today. And I have two stocks which I'll be highlighting. One, it's an earnings miss, of course, Natco. 20% down on that stock, and the other one is a hit, Suven Pharma.
Yeah.
Starting with the miss though, and Natco Pharma, that stock was down for a fifth straight session. In fact, in a matter of 5 sessions, the stock has eroded 1/4 of its value. Numbers were dismal, to say the least. It saw a decline in revenue, profit, operating income. Net profit was down almost 40%, revenue as well, similar quantum. very weak operational performance as well. EBITDA margins were down 2,700 basis points. Almost three. It's come down to 8.5% from 35%. That's the kind of pain when it comes to margins. In fact, the contraction happened due to lower contribution from Revlimid. That same thing happened with Dr. Reddy's as well. But they have their own set of launches lined up, which would cushion the fall in revenues due to the absence of Revlimid. But of course, Revlimid is a high margin product, and there has been a significant decline, in earnings due to a drop in the export formulation business of Natco. This end of the business was down 53% on a YY basis. It accounted for 44% of its total sales in Q3. But in FY24, the export formulation business had contributed to 76% of the company's sales. Domestic formulation business also saw weakness. It was down 3%. Domestic formulations business accounted for 15% of sales in the third quarter and just 9% in FY24. API sales also grew somewhere around 44% during the quarter. But the stock is trading below all the key moving averages and extremely weak at the current juncture. I think how they look to plug that Revlimid hole is something that will determine the future course. But for now, things are not looking all that healthy for this particular stock. On the flip side, you had Suvain, a good 70% jump, 77% jump in its profit. Revenue saw a 40% jump. Margins also expanded to 38 to 39% vis-a-vis 30%. You have growth that was led by the CDMO segment. And, CDMO segment almost doubled on a year-on-year basis. And that was driven by the consistent research and development efforts and business expansion initiatives that the company has undertaken. And of course, pharma CDMO segment continues to gain traction for the company. It saw a 2x or to 200% kind of rise in requests for quotations in the third quarter. That of course reflects the robust demand that is there, at multiple development stages. But the specialty chemical segment was down somewhere around 22%. But on a sequential basis, that also saw a good improvement. I think that is also something that aided the earnings for the company. Margin expansion was led by robust growth in the pharma CDMO as well as API business. The management was on CNBC TV 18, and they pointed out that they are committed to the target of $1 billion in revenue by 2030, and they are expecting revenues to grow across segments, and they are very confident that they will remain in the top quartile in the industry in terms of margins as well, and the margin guidance is somewhere around the mid 30% levels. The company is also on the lookout for inorganic growth. It wants to be a tech-driven CDMO player. Looking at the stock performance, it has snapped out of a 4-day losing streak. Stock, although, is down 55% from its highs in November. Currently trading at somewhere around 60 times. It's FY26 price to earnings. But if it's come down so much from its recent high, who knows? This earnings could be a trigger that could, let or help it regain its lost glory. But that was about pharma. But Yatin, another crucial event that's taking place tonight is the meeting between Prime Minister Modi and US President Donald Trump. I just want to take you through the timeline. 2:30 a.m. is when tonight. 2:30 a.m. is when PM Modi will be meeting Trump. There'll be a bilateral meeting that begins at 2:35 a.m. 3:40 a.m. they'll have a joint press conference. They'll be addressing the media, and 4:10 a.m. President Trump will be hosting a state dinner for Prime Minister Modi. A lot riding in terms of tariffs. I think even purchasing oil from the United States. A lot of things on the agenda. But I think it's the trade policies that will take center stage. All right, then I think with that we've come to the end of this edition of Closing Bell. Of course, red is the color that's dominating the screens ahead of Valentine's Day. But let's hope tomorrow is a day when, even if we see green like we did today, hope we manage to sustain those gains, because that clearly hasn't happened today as well. But with that, completely timed out. Thanks a lot for tuning in to Money Control and watching Closing Bell. Come back and join in tomorrow morning once again at 9 a.m. I'll see you there. Thank you.